Welcome back to our show, continuing the real estate conversation here on Brashonomics with Shawn Perry. Lucky to have Shawn Perry back. How are you, buddy?
Good, Ben. How are you?
I'm good. It's good to see you.
Thank you.
Happy New Year. I haven't even seen you this year.
I know, 2013. Here we go.
You know what? Does it get weird when people keep saying Happy New Year as we approach February? You know, I don't want to be that guy who all of a sudden it's February 15th and you're still rocking the Happy New Year chant, but I guess we got to.
I'm in the same boat. Some of us are just a little bit behind.
Yeah. Oh, well, it works. Well, you know, as we are here in February, or just about, it is always interesting to determine what's going on in the markets. And, you know, with low inventory continuing here in 2013, help us understand a little bit about putting your house on the market, because we just heard from Marianne. I mean, there can be a frenzy of buyers if you do it the right way.
Yeah, with some areas in this in Bellevue, Seattle, having less than a month's worth of inventory in the home. What's different about the market right now is typically over the holidays and in this January in the wintertime, there's not as many buyers that are interested, and so that's why people might not put their house on until the spring. This year, right now, what we're experiencing is a tremendous amount of buyers out there, right? And so it's a really strong seller's market. Like Marianne said, people are scrambling to get into the houses that come on.
So when you have all these buyers out there, does that mean every house would be guaranteed to sell? I mean, if they list it?
No, definitely not. I mean, the average days on market around here is between 25 and 40 days, depending on the neighborhood. So the best properties are the well-priced properties that come on the market and sell in less than a week has been my experience lately. But being that the average is as high as 25 to 40, that means that there are properties that are sticking around and just staying on the market. And I think what's going on there is that buyers really tend to start ignoring them. I mean, they don't want to waste their time on the properties that are overpriced or not in good enough condition, because there are going to be others that come on the market that week that they need to be really fast and really aggressive with in order to get those.
So I wanted to bring this point up, especially because with the overpriced factor or people paying too much, it always is a strange conundrum to me, because you have a appreciating housing market that seems to be appreciating faster than last year. And then people are so afraid to pay too much. But, you know, I equate it to buying a stock that, yeah, it's maybe a little bit overpriced, but the expectation is that it's going higher.
I think the MLS said that in December, year over year, the appreciation rate was 6.5% to 7% in this area. So, there is an amount of appreciation going on, but the market is, just kind of naturally doing its own work with the appreciation right now. Properties that are well priced, I mean, they capture enough attention that buyers kind of get emotionally involved. They want this house now. They have to have this house, and so yes, they end up spending a little bit more money on them.
And that's what drives up the market, really.
That drives up the median price. That drives up all the averages, right?
Yeah. So when people are actually deciding to sell, I mean, can they throw it on the market and just see what happens?
Buyers are still awfully smart, right? They still have a long memory, and if about what happened to the housing market over the last 5 years,
right?
And if they don't, their agents certainly do. So no, I think that the market is naturally doing.
Can I just put my house on the market for 2007 price? That's what I want to know, Shawn. Can I just do that?
I think you're probably going to be a little high. Yeah, I think you're still going to be a little high. We saw, over the last since 2007, 2008, we're seeing some significant depreciation. This is the first time that we've really seen stabilization, even some appreciation. So no, we're not back at 2007 prices, but. We'll see what happens.
Tell my wife we're still not moving.
Yeah.
Shawn Perry joins us, realtor with Windermere Real Estate. Shawn, so when somebody's going to list their house, or they do list their house, and assuming they do get offers, we talked a little bit about this, but how do you determine what is going to be the offer that they are going to accept? Because there's so many different factors.
Yeah, multiple offers, very, very exciting. Certainly price is often a big factor, but I really don't think that it's the only factor. What I talked to a seller about looking at is not only just the price, but also what kind of financing is the buyer using, or are they an all-cash buyer? Remember, with financing, there's an element of risk for the seller. I mean, the buyer has the option of if they can't get financing for some reason, they can rescind the contract. If the house doesn't appraise for the property for the amount of the contract, then we have to have that discussion. That would be a really important one, right? In an escalating environment where there's multiple offers and you accept an offer for who knows how much over the list price, will the property actually appraise for that price? Some with financing, that's going to be really, really important.
So the appraisals are also maybe what keeps house prices from leapfrogging in any even faster way, even bigger price adjustments, simply because most people are financing houses, and it's the appraisers who don't want to have their butts on the line for over appraising houses.
Right. An appraisal is looks in the past. An appraisal looks 6 months back. It's not looking at what the market is like right now. So certainly that's a kind of a tether on the real estate market in a way. You bet.
So what are some of the other factors outside of financing that really help your clients who are listing homes determine what's going to be the right offer for them to accept?
Other than financing, typically there's two phases of negotiation in a real estate contract. The first is with the terms and conditions of the sale, the purchase price, the day that it sells, all of that good stuff. The second is the inspection period. I mean, it's in a way, it's almost a get-out-of-jail-free card for the buyer, that inspection period. It's a subjective satisfaction with the property, so they can walk away for pretty much any reason that they like. So that's another thing that we consider. Did the buyer do an inspection prior to making the offer? Is their inspection period 3 days? Is it 10 days? How long is that period?
Mm-hmm.
So that's something that's really important, again, because it's an element of risk for the seller. Is the buyer asking for closing costs? Is there any seller concessions that they need? Are they asking for money to replace the carpet after closing? I mean, those sorts of things. How much earnest money are they putting down is something that I think people should take a look at. How much skin is going to be in the game? Do they, is this a $500,000 house that they're giving you $2,000 in earnest money, or is it $15,000 or $20,000?
Sure.
So those are some big things. And then lastly, is that contingent upon the sale of another home? This is a very fast-moving market right now. Nevertheless, the sale of another home is a big risk factor in a way. I mean, if they're not willing to price their home at a price that's going to be competitive for the market, or if they can't, those are big factors.
If it is contingent on the sale of another home, how much information would you be able to request as the potential seller of the buyer of the seller, I suppose, if you can follow that?
I'm just going to simplify it to seller's agent. As the
There you
seller's
go, yeah.
agent, what I would say is I'd be very interested in. I would take a look at the houses. I would go to the house myself. I would want to take a look around the house, check its market condition. Go look at the comparable properties. Take a look at that are on the market right now. What's their competition going to be like?
And do a lot of due diligence on that property, on the property
must.
they're trying to sell.
Absolutely a must. Because, a contingent offer, it is a fast-moving market. That might not be such a bad thing.
It could sell in a day, the way things are going.
Yes, but without that due diligence, I think, it must be done to represent a seller properly.
Yeah, and is there a way to tie them into if they haven't listed it yet, is there a way to tie them into, we'll accept this based on your list price of X? I mean, how much control can a listing agent end up having on another property?
The great part about contracts is that as long as both parties agree, you're golden. So I think that's a discussion that you have to have with them. What price are they putting it on at? And perhaps even put it in writing that they have to put it on at this price on this date in order for the contract to be accepted.
So something that is actually maybe outside the confines of your typical real estate contract from residential side that you're able to do.
Right.
Great. Well, Shawn, thanks so much for joining us. It's good to see you. Stick around for a few minutes. Love to get a few more of your opinions. We'll bring everybody back on the air here in just a few short minutes. We'll be right back.